We're jumping straight into Dalio's principles for dealing with the changing world order.
Yeah, big topic.
Huge. We're focusing on the historical rise and fall of empires, and their currencies.
What really drove those massive shifts? And maybe what can we learn?
Exactly. Look, you want to get smart fast on the big trends shaping our world, right?
Mm.
So this is basically your shortcut. We're drawing directly from Dalio's data, his analysis, centuries of change boiled down.
And we've really spent the time going through it, all the charts, the tables. It's very visual.
Is
Our goal, our mission, if you like, is to pull out the core reasons behind these cycles.
the levers of success, the triggers of decline.
Precisely. And crucially, how those historical patterns might be playing out today or, in the future.
So thinking about right now, what are those deep, long-term forces really doing?
That's the big question, isn't it?
Okay, let's try and unpack this. Dalio starts with this concept of a big cycle.
All right, this rhythm. Roughly 500 years, he suggests. World orders rise, they fall.
And his charts on global real GDP are pretty stark. You see Europe becoming incredibly dominant after, 1870?
Yeah, though he does note the earlier data is heavily Eurocentric, so keep that in mind. But the shift itself is clear.
And then you layer on things like global life expectancy,
Oh, that's fascinating. You see these dips lining up with major crises.
like wars, pandemics.
Yeah, the 30 Years' War, Spanish flu, even COVID-19 shows up as a blip.
So they're not just random events. They seem to be part of this cycle.
They appear as these recurring pressure points, these stresses on the system within the broader cycle.
And Dalio drills down further, right, looking at conflicts.
He does. He distinguishes between internal conflicts within a nation and external ones, between powers.
And the impact is huge. You can almost pinpoint events like the Ming Dynasty collapsing or the World Wars.
Just by the sheer scale of the deaths in conflict he estimates, it really underscores the disruptive force of these power struggles.
Yeah, absolutely.
Then there's that visual. He uses the relative standing of empires over time.
Oh yeah, the one that looks like different colored lines rising and falling.
That's the one. It's like watching nations pass the baton. The Dutch, then the British, the Americans.
And now, clearly, China's ascent.
Unmistakably. It gives you that crucial context. You realize we're just seeing one frame in a much, much longer film.
Okay, so what are the ingredients? Dalio breaks down this typical rise and fall. Let's start with the rise. What drives that?
Well, typically you see strong, capable leadership emerging.
Makes sense.
A culture that really values inventiveness, education, a strong sense of collective purpose, maybe.
Okay.
Good resource allocation, putting money and effort where it counts, being competitive internationally.
And that leads to economic growth.
Generally, yes. Income growth, strong markets developing, often around a major financial center.
And what about the peak? The top, as Dalio puts it. Is it just more of the same?
Essentially, yeah. The characteristics that fueled the rise often continue for a while. Things are good.
But there's always a but, isn't there?
Always. Because even during that peak, the seeds of the eventual decline can start sprouting.
Like what?
Things like overextending, maybe militarily, maybe economically. Empires get big and unwieldy.
Okay.
They might lose that competitive edge they had initially. Other nations start catching up, innovating.
And internally,
Big wealth gaps can start to appear. That can cause social friction down the line.
that sounds familiar. What else pushes things towards decline?
Well, then you often see large debts building up. Public, private, both. And the temptation, which history shows is often taken, is to start printing money to deal with those debts.
Which devalues the currency.
Eventually, yeah. And that can fuel internal conflict, weaken leadership further. In extreme cases, you get civil war, revolution.
And the final nail in the coffin, maybe?
Often, it's losing that coveted reserve currency status. That really hits a nation's global power.
And Dalio has that visual, right? The sort of dashboard.
Yeah, with the color-coded gauges. It tries to show, conceptually, how these different factors tend to score across the stages, rise, top, decline.
So these aren't just theories, they lead to real-world changes.
Absolutely. He connects these stages to major shifts in the actual world order.
Like,
Things like huge debt restructurings, defaults, write-offs, internal revolutions that redistribute wealth and power,
external wars.
external wars that redraw maps, currencies collapsing, and eventually a new domestic order and a new world order emerges from the ashes.
It sounds like a really disruptive process.
It often is. It's fundamental transformation and, yeah, often quite painful.
Okay, let's dig into the mechanics a bit more. Dalio mentions 3 big cycles working together.
That's right. There's the big cycle related to debt, money, capital markets, and the economy. That's sort of the financial plumbing.
Got it.
Then there's the cycle of internal order and disorder, think social cohesion, political stability, or lack thereof.
Okay, internal stability.
And finally, the cycle of external order and disorder. That's about international relations, peace, war, the balance of power between nations.
And they all influence each other.
Definitely. They're interconnected. A big economic downturn can fuel internal unrest, which might tempt leaders into external conflicts, for example.
Right. And underpinning all this are the basic measures of national strength.
Exactly. He identifies 8 key ones.
Okay, what are they?
Education, quality, and reach. Innovation and technology, are you inventing the future? Cost competitiveness, can your industries compete globally?
Military strength.
Military strength, absolutely.
Right.
Trade volume and importance. Economic output, just the sheer size of the economy.
Financial center strength.
Strong markets and a leading financial center, yes. And finally, that crucial reserve currency status.
Those seem like the core pillars.
They are. But he adds others, too.
Oh, like what?
Things like how efficiently resources are allocated, the
Alright.
quality of infrastructure and investment. And then some less tangible things, like the character, civility, and determination of the population.
Harder to measure, but important.
Very. Plus governance and the rule of law. And also the potential risks from big gaps in wealth, opportunity, or core values within the society.
Wow, that's a lot of factors. It sounds incredibly complex. Are there underlying dynamics we should focus on?
He does highlight a few key dynamics to watch, like basic self-interest and the pursuit of wealth and power is always there.
Human nature.
Pretty much. Also, how well does a society learn from history? Or does it keep making the same mistakes?
Good question.
Multi-generational psychology plays a role too, how attitudes shift over time. The time horizon of leaders, are they thinking short-term or long-term?
Leadership quality again?
Yep. Openness to global thinking versus becoming too inward-looking. Core cultural values, class relationships, political polarization.
That sounds very relevant today.
It often is. And of course, the shifting balance of power internationally. It's this constant interplay.
Okay, let's zoom in on the money part. Dalio differentiates types of money.
He does. He breaks it down into 3 main categories, historically speaking.
What are they?
First, you have hard money. Think gold, silver. It has inherent value, high credibility, but it limits how much credit you can create.
Right, you need the physical stuff.
Exactly. Second, claims on hard money. These are like early banknotes that promised you could exchange them for gold or silver.
So more credit possible, slightly less direct credibility.
You got it. And third, there's fiat money. This isn't backed by anything physical. It's based purely on government decree and trust.
Like the US dollar today.
Prime example. It allows for maximum credit creation, but its credibility rests entirely on faith in the issuer.
And the history of reserve currencies really shows these power shifts, doesn't it?
Absolutely. Dalio tracks it clearly.
Yeah.
You see the Dutch guilder being dominant, then the British pound takes over.
And then the US dollar.
Right. Each shift reflects the changing economic and geopolitical weight of those nations.
How has the actual value of these currencies held up over time?
Well, if you look at their exchange rates against something stable, like gold, you see huge variations.
Periods of stability, then big drops.
Exactly. Big devaluations often happen around major wars or economic crises. Think post-World War I or when the Bretton Woods system ended in the early 70s.
What about real returns, like after inflation?
Looking at the data since 1850, Dalio shows what's actually held its purchasing power.
Gold versus currencies.
Yeah. And he breaks it down before and after 1912, which was a pivotal time. It gives you a sense of true long-term value retention.
Okay, shifting gears a bit.
Yeah.
Let's talk internal dynamics, that cycle of internal order and disorder.
Right. He outlines a typical pattern there, too.
How does it usually go?
It often starts with peace and prosperity. Things are good. People feel optimistic. But then excesses can creep in. Maybe speculation, maybe widening gaps between rich and poor.
Creating tension.
Exactly. Social tensions rise. Financial conditions might deteriorate. This can lead to more intense internal conflicts. Protests, strikes, maybe worse.
Like civil war.
In the more extreme phases, yeah. Civil wars, revolutions, times of great upheaval.
And out of that comes...
Eventually, a new internal order is established, often with new leadership, maybe new rules, sometimes a redistribution of wealth and power.
It's fascinating how he maps this onto Chinese dynastic history. It seems to fit that pattern.
Yeah, the visual suggests a recurring theme across very different contexts. It's quite compelling.
And he links global GDP per capita to these internal events, too.
He does. The timeline suggests a correlation between economic well-being and social stability. When one suffers, the other often does too.
There's even a chart suggesting conflict becomes more likely when the economy tanks across multiple metrics.
That's a key insight. When a certain threshold of economic indicators turns negative, the historical probability of significant internal conflict goes up sharply.
A warning sign.
Definitely. But it's also crucial to remember, as Dalio points out, not every conflict leads to a total system change. Some are contained, others transform everything.
Right.
And looking specifically at Europe, the chart showing deaths from conflict over centuries really highlights those periods of intense internal strife. Wars of religion, revolutions, etc. The human cost is just staggering.
Okay, we've touched on internal order. What about the external side? The big cycle of external order and disorder.
Right. While we don't have super detailed charts for that specific cycle in the excerpts today, the concept is fundamental to his model.
What does it cover?
It's about the relationships between states, the rise and fall of alliances, the emergence of new challengers to the dominant power, and crucially, major wars between countries.
Like the world wars changing everything.
Exactly. Those kinds of conflicts reshape the global map, create new international rules and institutions, and establish a new balance of power. It's about the interactions between the major players on the world stage.
So, with all these huge overlapping cycles, economic, internal, external, Basiri, how does Dalio suggest thinking about investing? It seems daunting.
Well, the core ideas for investors revolve around risk premiums and discount rates.
Okay, explain that a bit.
Risk premium is basically the extra return you demand for taking on more risk. Discount rate is how you value future income streams today. In the context of these big cycles, how you assess risk and future prospects can change dramatically depending on where you think a country is in its cycle.
So returns aren't uniform across time or place.
Not at all. Dalio shows real asset returns, stocks, bonds, etc., across major countries over 10-year windows. The variation is huge. What worked in the U.S. in one decade might have been terrible in Germany, or vice versa.
It really drives home the need for investors to be aware of these bigger shifts, doesn't it? Not just looking at quarterly earnings.
Absolutely. You need to be adaptable and consider this long-term context.
He looks at some specific, maybe tougher investment histories too.
Yeah, examining places like Russia, China, Austria, Hungary during periods of massive upheaval really underscores the point. You see incredible wealth creation sometimes, followed by total wipeouts due to revolution or war.
And the data on how many portfolios lost huge chunks of value.
Right. He charts the percentage of portfolios losing 10%, 25%, even 50% or 90% over 5-year periods in different countries.
Yikes.
It highlights the real possibility of significant, sometimes rapid, capital destruction depending on the circumstances.
He even lists the worst 20-year periods for investors in different countries.
Yes, linking catastrophic returns directly to events like hyperinflation, wars, regime changes. These aren't theoretical risks. They have happened repeatedly.
Some of those stories of wealth confiscation or capital controls are pretty stark reminders, too.
Definitely. History shows governments can and do change the rules dramatically in crises. Your assets might be frozen, taxed heavily, or even seized.
And markets just closing down entirely during wars.
Yeah, the frequency of stock market closures, often tied to major conflicts, shows how fragile market access itself can be.
When you overlay that with the data on deaths in conflicts as a percentage of population, it's sobering.
It puts financial losses in perspective, doesn't it? The human cost is the ultimate tragedy, and the economic fallout is immense and long-lasting.
Even smaller things add up, like taxes.
Yes, he shows the impact of taxes on long-term S&P returns. It makes a difference over decades.
What about market dynamics, like bubbles?
Dalio tracks U.S. financial assets as a share of total assets, pointing out periods that look like bubbles and the subsequent crashes or crises.
And returns on safe assets like bills.
Looking at real returns on Treasury bills, adjusted for inflation, shows periods where investors actually lost purchasing power, even in supposedly safe assets.
And gold's role.
He looks at how gold performed during major drawdowns in a typical 60-40 stock bond portfolio. It often acted as a diversifier, holding up when other assets fell.
Which brings us to today's environment. Those incredibly low bond yields and cash rates in the US, Europe, Japan.
Yeah, historically very, very low, both nominally and in real terms, after inflation.
What does that mean for investors?
Well, Dalio looks at payback periods, how long it takes to recover your initial investment's purchasing power.
Uh-oh.
In some scenarios, with current low yields and potential inflation, The calculations suggest you might never get your purchasing power back from cash or bonds.
That's a critical point for anyone saving for the long term.
It really is. It forces a rethink of traditional asset allocation.
Okay, let's take that step back again. 500 years. What did the world even look like around 1500?
Dalio provides a map. It's a very different picture. Ottoman Empire, Ming China, various European states, the Americas largely outside the main Eurasian system.
And then technology starts changing things.
Big time. The printing press arrives in Europe. He charts the explosion in book production. Information starts spreading much faster.
And global trade kicks in, like the silver trade.
Hugely important. He shows the UK price index soaring during the Spanish price revolution, fueled by silver coming from the Americas.
And charts the actual silver production from Mexico and Peru.
Yeah, massive amounts flowing out, driving global commerce. And you also get a sense of Ming China's scale from estimates of its tributary areas. It was a huge player.
Okay, let's use some specific empire examples from the book. The Dutch. How did their cycle play out?
Right, the Dutch Empire and the Guilder. Dalio has an index tracking their key power determinants over time. You see the clear rise, the peak, and the decline.
The Dutch arc.
Exactly. And he compares it visually to other powers. You see their golden age really stand out.
What drove that golden age? Innovation.
A lot of it, yes. Their share of major global inventions peaked impressively. Their share of global output, too.
It compares them directly.
Yeah, charts comparing things like universities founded, books published, inventions per capita, share of exports. The Netherlands was punching way above its weight.
Especially in inventions per person compared to, say, the UK and France early on.
Significantly higher during their peak. And you see it in the GDP per capita figures for Europe, too. The Dutch really pull ahead for a time.
And the Guilder was strong then?
Very stable during the rise. He contrasts it with, say, the Spanish currency at the time, which was being devalued. The Dutch East India Company, VOC, was paying out huge dividends initially.
So what went wrong? How did the decline happen?
It wasn't one single thing. A series of costly wars, particularly against England and France. Growing competition eroded their trade dominance.
Financial strain.
Definitely. You can see it in the accounts of the Bank of Amsterdam, the balance sheet of the BOC. Debt grew, profitability fell.
And the currency weakened.
Yes, the guilder started losing value against gold and the British pound. The Bank of Amsterdam's reserves dwindled relative to its deposits.
That chart on VOC returns is brutal, isn't it? Depending on when you invested.
Oh yeah, huge gains if you got in early. Devastating losses if you bought near the top or during the decline. A classic boom and bust linked to imperial fortunes.
And bond prices fell too.
Dutch government bond prices declined as wars and political instability took their toll. It shows the broad financial impact of the empire's decline.
So a combination of overreach, competition, costly wars, and financial weakening.
That's a pretty good summary of the factors Dalio highlights for the Dutch decline.
Okay, next up. The British Empire and the pound. A much longer arc.
Much longer, yeah. And again, Dalio tracks the key determinants, showing that familiar rise, peak, and, well, a more gradual relative decline that's still unfolding in some ways.
The visual UK arc shows their period of dominance clearly.
Very clearly. And you can see indicators like government bond yields falling during their peak, reflecting stability and strength, then rising later. Government revenues as a percentage of GDP also climbed significantly.
And they took over the innovation leadership from the Dutch.
They did. The charts comparing inventions show the UK pulling ahead, especially during the Industrial Revolution.
Which obviously transformed their economy.
Massively. The GDP per capita charts show that takeoff. He also compares things like literacy rates and university founding with rivals like France, showing the development of human capital.
And the British Empire itself grew huge.
Enormous. Dalio charts its size, its massive share of world exports, its huge international investments. They were the center of the global economy.
And the pound was king.
Absolutely. It was the world's reserve currency. A huge share of global debt and trade transactions were denominated in sterling.
But then challengers emerged.
Right. The U.S. and Germany in particular, Dalio charts their rising shares of innovation, GDP, manufacturing output.
You see the competition building.
Clearly. He also points to internal factors in the U.K., like a widening wealth gap, and compares things like education spending with Germany, suggesting potential weaknesses.
The shift in things like Nobel Prizes and patents also tells a story.
It does. The U.S. and Germany start winning more, reflecting the changing technological landscape. And the charts comparing British and German warship tonnage before World War I, that's a stark illustration of the growing military rivalry.
Then the world wars happened, which dramatically weakened Britain.
Hugely, financially and geopolitically. Dalio shows the pound's declining share in global reserves, debt, and trade after WWII.
It wasn't an immediate collapse, though.
No, more of a long, gradual decline punctuated by crises. He tracks the USD-GBP exchange rate, the pound versus gold, and its trade-weighted index, the UK's current account deficits, all showing pressure.
The 1960s devaluation seems like a key moment.
It was. Dalio details the run-up to it, dwindling gold reserves, pressure on the exchange rate, and after the devaluation, the pound share of central bank reserves really plummeted.
A clear loss of status.
A very clear signal. He then brings it up to the present by comparing the Eurozone, US, and China across key metrics, showing the current configuration of power, and uses the 2008 Eurozone crisis as a modern example of economic stress within a major bloc.
Okay, let's turn to the United States and the dollar. Their rise seems quite rapid in historical terms.
Relatively rapid, yes, especially in the 20th century. The index of determinants shows that strong upward climb. The U.S. ARC visual highlights its rise, particularly accelerating after the World Wars.
The dollar replacing the pound.
Exactly. You can see the dollar strengthening against European currencies, even around WWI. Post-WWII, the charts show the U.S. as the clear dominant power, militarily too, with nuclear weapons data illustrating that.
And Dalio tracks the U.S. economy since then.
Yeah, things like interest rates, inflation, showing the policy responses over decades.
More recently, though, there are signs of challenges, according to his framework.
Based on his determinants, yes. He highlights the shifting trade balance, especially comparing U.S. exports minus imports with China's.
Right, the rise of China is a huge factor in the U.S. story now.
Absolutely. Internally, he points to rising private sector debt levels in the U.S., alongside interest rate trends.
And social factors.
Significant focus on the widening income and wealth gaps. Charts show the top percentile share increasing relative to the bottom.
Political polarization, too.
Yes, he charts the growing ideological distance between the major parties and the increase in party line voting in Congress.
What about recent economic data?
He includes things like the unemployment rate and the Federal Reserve's balance sheet expansion, often comparing them to the Eurozone, UK, and Japan to provide that global context. The shifting political spectrum visual also suggests internal changes.
So a picture of continued strength, but also emerging challenges, both internal and external.
That seems to be the interpretation based on his framework and the data presented.
Now, China. Its rise is one of the biggest stories of our time.
Undeniably. The index of determinants for China shows a truly dramatic improvement, especially since the late 1970s.
But China has a very long history as a major power.
Extremely long.
Yeah.
Dalio's chart of China's relative standing over centuries shows periods of immense power, decline, and now this remarkable resurgence.
He looks at their financial history, too.
Yes, a timeline showing transitions between different types of money over China's long history. Also, long-term inflation data, including devastating hyperinflation in the past.
And more recently.
Recent trends in the renminbi versus the dollar and gold, data on China's inflation, and real GDP growth.
The development statistics since the reforms began are just incredible.
They really are. Massive gains in GDP per capita, life expectancy, poverty reduction. He provides tables summarizing key metrics since 1949 and 1978.
How does China compare now on things like education?
He includes comparisons with the U.S. on metrics like average years of schooling, government spending on education, showing China catching up rapidly in human capital.
But the dollar is still dominant globally.
Yes. The chart showing central bank reserve holdings by currency makes that clear. The dollar is still number one by a wide margin, but the renminbi's share, while small, is growing.
The U.S.-China relationship feels absolutely central to where things go next.
Dalio certainly positions it that way. While the excerpts don't detail specific war scenarios, the dynamic between the established power and the rising power is presented as the key geopolitical axis for the coming decades.
Okay, looking to the future then, what broader global trends does Dalio highlight?
Well, fundamental demographics, first global population trends, growth rates, long-term progress markers like life expectancy and GDP per capita globally, but also vulnerabilities like drawdowns in global real wealth per capita during crises.
What about risks?
He tracks global deaths from different causes, famines, disasters, pandemics, showing how risks evolve, And conflict deaths remain a major concern.
He projects forward based on current scores.
He presents current scores for things like innovation and technology, showing recent changes, also current debt levels across major powers.
And reserve currency status.
Yep, shows a current picture there. Plus gauges trying to assess the risk of internal conflict in various countries, and specifically the U.S.-China conflict potential.
Military power.
Current military strength rankings are included. And then there's the whole environmental context.
Climate change.
Yes. Long-term temperature and CO2 data. The increasing frequency and cost of natural disasters. Climate change vulnerability rankings for different countries. It's a crucial overlay.
And then he pulls it all together for specific countries.
Exactly. The final sections in the appendix provide detailed scorecards for the US, China, Eurozone, major European countries, Japan, India, Russia.
Showing their current readings on all these different metrics.
Yeah, the overall empire score, the status of the big cycles, the 8 power measures, the additional factors, plus indicators of recent trends. And finally, some projections for GDP growth over the next 10 years. It's an attempt at a comprehensive snapshot.
Wow. Okay, that's a huge amount of information we've covered. If you had to boil it down, what's the main takeaway from this deep dive into Dalio's work?
I think fundamentally, it's the emphasis on the cyclical nature of history, especially regarding empires and world orders.
Things rise and fall in somewhat predictable patterns.
That's the argument. And that certain key factors, the determinants we discussed, like education, innovation, debt, internal cohesion, external power balance, consistently drive these cycles.
And it's all interconnected.
Deeply interconnected.
Yeah.
Economic health affects internal stability, which affects external power, which feeds back into the economy. You can see these linkages playing out again and again in the historical data he presents.
It definitely makes you look at current events differently, doesn't it, through this much longer lens?
It really does. You start asking, okay, where might different countries be in their respective cycles according to this framework? What historical parallels seem relevant today?
Which current trends seem to echo those past indicators of rise or decline? It's a powerful framework for thinking about the future, even if it doesn't give simple answers.
Precisely. It's about understanding the patterns and the forces at play, not necessarily predicting the exact future. It encourages you to think critically about the long-term dynamics shaping our world.
It certainly does. We really encourage you, the listener, to dig deeper into Dalio's book if this has piqued your interest, or explore some of the fascinating historical periods we only had time to touch on.
So much more detail there.
Absolutely. Thanks for joining us for this deep dive.